Welcome to the Chaim Investment Advisors podcast. It's been a minute, but this is Chaim, and I am here with Pablo Lasha.
How's it going? Yeah, it's
Yes,
been quite a while. So hopefully,
it's been a
we
while.
can do more of
We've been
these.
in
You
different
want
time zones all of the
Yeah,
times.
that's right. I'm now in the Eastern time zone in the Southern
Yes,
Hemisphere. So
yes.
yeah,
So we are tuning in from multiple continents to talk
yeah,
about AI and investing, artificial intelligence, which is one of the most talked about themes in investing. Arguably, it is the only profitable sector of the entire stock market in 2023. There are many charts to tell us that that's true, and I'll probably find one to edit in when
yeah,
this goes up on YouTube. But
yeah,
it is a lot of the upside these days. So something to talk about.
yeah. I do. I think it's something interesting to talk about. I think as we're probably going to discuss, we talk about a couple of the buzzwords. We'll talk about the popularity of AI, and I think one thing to focus on is that this idea of AI that seems really new is not new. Even for you and the tools that you use when putting together the portfolios, you've used AI for a long time. People, almost everyone listening to this conversation will have used AI, and I think what people conflate is this language generation model of AI, and they think, oh, this is AI because it sounds like a person when it types. You know what I'm saying? Or it can sound like a person if it speaks. And that's definitely a cool technology. I question whether people understand because of how it works, how reliable it is. I would say it's it can be reliable for certain things, but I would not rely on it for important things.
Right, not yet. That's
Yeah,
definitely
yeah.
true.
Say that just in, and I'm sure you use it also, but just in the things that I've done, things that I have subject matter expertise in, when I ask it questions, it has no idea what it's talking about.
That's
Which is both true literally because it's not an intelligence, and is also true metaphorically speaking because it's rambling on about things. So I think we should discuss what AI is, and maybe you could start with um, the tools where you use AI in your work. So
right. So AI is a few different things. So you got generative AI. That's the thing. That's the reason as a trend it took off. It's like
yeah,
that that hit the market. It was
yeah,
already a trend behind the scenes, and
yeah,
it's been around for some time, but it definitely got hot after that started being a thing. So that's one format. That's
yeah,
the exciting thing. It grabs the headlines. And then you have what they call the weak AIs. And
yeah,
that's the stuff that everybody now takes for granted. Like, of course,
yeah,
they don't even remember that they're using AI when they're using it because weak AI is like uh, single purpose stuff that is fairly rote. It's fairly easy to utilize and exploit and forget
yeah,
that you're even doing it. Like looking when somebody leaves me a voicemail, I don't even read it. I don't listen
yeah.
to it. I actually just
I just read it. Yeah. Well,
let
and
Apple
actually,
transcribe it for you.
we do this all the time, like on our cell phones when we use predictive text.
Yes.
We're using a type of AI. And the thing is, like you said, this week AI is just not sensational. We don't find it. We find it to be slightly interesting. But honestly, it's probably the more reliable AI for a lot of things. These sort of
Yes.
just very specific behaviors. If you think about chess. Grandmaster in chess who's training and he's using stockfish and stuff of that nature. These things are way more reliable and probably way more productive. Though this other stuff seems very sensational, and eventually it'll get to a place where we know how to use it as a tool. Um, well, I mean, recently there was, I'm pretty sure that there was a court case where this lawyer was reprimanded for using ChatGPT, which created cases that didn't even exist, and so he was citing cases that were fictional, and so there is a danger there in thinking that you can rely on this even for an interpretation of reality.
right.
That like that's not even counting like the sort of biases that can be built in, et cetera. Yeah. So yeah, I agree.
Yes, but weak AI is super useful, and weak is in the name, but it's the
Yeah.
one that's real.
Yeah.
The
Exactly.
strong AI is mostly theoretical, and general
Yeah.
AI
Yeah.
is mostly sci-fi at this point, which
Yeah.
is it just is its own intelligence entirely, and
Yeah.
it's not necessarily prompt based like a lot of those generative AIs. Like I use a generative AI synthesizer. It still
Yeah.
needs me to be hanging out and pushing the
Yeah.
keys.
Yeah, exactly. Yeah. Oh, and the thing is, like, we look at like the word, the language model generative AI, and part of like just like a really basic part of like how it works is like it's really just looking at probabilities of what the next word should be based on its
Right,
like large database. Which if you think about it, is it may look like a great way to answer questions, but it's not necessarily a great way to answer questions. Now, for one, you could just think about the data that like where it's getting the data from. You know what I'm saying?
right,
Like if it has outdated data, if it's like taking data from like people who don't know what they're talking about, is it like selecting out like things that are fiction versus things that are actually true? I for one asked it to like build me a proposal to submit, and it just made up things I'd never done. I didn't ask it to do that; it just did that thing. So like you just like learn
right.
your lesson about that. But like you said, like I think the weak AI is like for reliable. We know what the outcome is going to be. We know if it works or not. The robustness and testing it, like we'll know like if that's like useful. And I think that's where these small incremental innovations where we like are going to see a lot more like progress. And that kind of like actually that incremental innovation kind of brings us to like another piece, which is that like a lot of these AI companies or so-called AI companies, uh, that to be honest, like let's not even talk about like how many of them are actually AI and how many are actually not. Let's just like for the beginning, just assume they are. They're coming out and saying they're disruptive. And I feel like that warrants some attention because we should talk about what
Yes,
disruption actually is. Yeah,
yes. So that I was definitely going to ask you early on
yeah,
in the conversation.
yeah,
Disruption,
yeah,
you hear it every time. And every time I've been on a call with an asset manager who has an
yeah,
ETF that has robotic or technological or AI,
yeah.
disruption is the main buzzword. It's the operative buzzword. And so
Yeah,
I wanted your economic take on
yeah.
what is disruption.
Yeah. So I think disruption has like a very specific definition. And I learned about this from like a Harvard professor I was watching, a business professor. I don't recall his name, but like maybe we can throw it on there at the end. I'll like try to find him. But he was a really smart guy. He's talking about disruption. And disruption is when you create a new market. So if you're not
Right.
creating a new market, you're not like disrupting anything. I think like, we talked before, like, so a good analogy would be like Netflix stole all of Blockbuster's customers and they created a new market. You can say they created a new market because like literally the other market closed down. The market of like going to the store and renting DVDs was no longer existed. Netflix they didn't like steal away some. They destroyed the other market and they created a new one. You don't necessarily have to destroy a market to make one, but that's a good example. You can think also like Uber versus cab drivers. Like even though they're performing a similar
Right.
service, the market is now no longer the same place. You now no longer have to go get medallions in the city. You can just
Right.
have a car, get an app, and now you are a cab driver. And so
Right.
another way we can think of like what is not disruption, right, is we think of like Amazon Prime. Now they came along and offered streaming, but streaming already existed. They're just a competitor. They're not disruptive.
Yes.
Like a strong competitor, no, nonetheless. You know what I'm saying? But if you're not creating a new market, you're not disrupting anything. you know,
Right.
you're just
Yes.
you're just competing. And one of the big things is it's not always true, but it's often true that like it depends on like the economy scale and like technology. One of the big things is like if you're the first person to market, you have a really strong advantage. Now it's not always true because you look at like Yahoo, they don't exist anymore. And in technology, you do have a little bit more of an edge to compete. You have a little bit more of an edge to like if you become better, if you figure out something, if you can make the right incremental changes, those technological changes, like if you look at like how Google and Yahoo used to have different search engines, yeah, you may be able to like take take away those people. But often, like first people in the market, second people in the market, third people in the market, these people are staying. Of course, is like when you create new markets altogether, like cars and stuff. Like I think that's a little bit different, right? Because like you had a bunch of car companies, and then there was only a few car companies, you know. And so that's definitely like there's definitely, and that's a maybe a good thing to point out. Like when you actually have disruption, if you do have multiple competitors, you know, you it's hard to tell who's going to win.
Yes.
And if you're disruptive and you only have one person in the market, well, like it's easy to tell who's going to win, you know. And I think like that's what those people are selling. They're selling the idea that they're the one person in this market and they're disruptive. And I would, you know, I don't know like all those companies that are claiming that, but I would venture to say that that's probably not true. They're not like millions of new markets being created every day. Like it just seems unlikely to me. So
Yes. Piggybacking off of that comment on new markets, I think
yeah,
my thesis on AI investing, because I've had lots of opportunities to talk about it like in very narrow context, but like a more general way that I think about it would be that so disruption that's going to happen. I think we are talking about a thing that has some format of disruption, right? So, on the one hand, there's going to be new markets created by AI. There's going to be
mm-hmm.
new services. There's going to be new hardware. There's going to be new software. There's going to be new services. So those are all investable, right? Like
Yeah,
those
yeah,
are unique, discrete investment themes. And so that's like one slice of this thematic AI investment is the very literal one. And there could be some interest there because we're talking about entirely new companies, new markets, potentially. But also, there's also, if it's going to be a big deal, AI, technical term, big deal, um, uh,
yeah.
then what you need is for those, figurative picks and shovels companies in AI that literally make the service, literally make the hardware. Uh, you need firms to be able to take that and make money.
Yeah,
So it's got
yeah,
to be something that can be profitable. And in that sense, in some ways, the easy way may be the most profitable way in terms of how
yeah,
do you invest in AI. Because here we're
yeah,
talking about industrials, financials, consumer cyclicals, consumer discretionary, all having ways to make more money than sometimes the actual providers of the infrastructure. And that's what I'm really interested in AI long term as an investing trend is this idea that there's going to be opportunities that don't have AI in the name. They don't make AI,
yeah.
but it's core to their service and why they do it cheaper and they do it better and they have bigger margins. That I think is really investing and not something that I hear AI investing people talk about ever.
Yeah,
The
so I think that like
conversation.
that really I think that sounds like a good thesis to me. And like going back to like sort of analogy of like maybe the new market of cars or something like that. If you think about it, or anything that like in the sense of like any sort of capital that like is being it's like a new form of capital is like being released to businesses. You think about it, it's like easier for you to choose companies which you know are going to be profitable from that new technology than it is to choose which company is going to be the profitable or successful. So yeah, I think that makes way more sense, right? If like we can choose a
Right.
company and we know this company is sort of either pretty successful or semi-successful or it has like some sort of established base, and we know it's going to eventually choose the right AI technology for
Yes.
it. That's easier than choosing the AI technology, which one's going to be good. Like this is like that's much more difficult. So
that's
yeah,
a, that's
yeah,
such a good point. It's a lot easier to like know, like in financial services. We already
yeah,
know, for example, consumer finance that does a lot of like underwriting with like credit cards, right? With
yeah,
revolving debts.
yeah,
AI is super useful for them in fraud protection, fraud detection,
yeah,
in underwriting and analyzing creditability of the people who are taking out credit. Like that is
yeah.
something that AI can help a great deal. But we already know who generally is really good at figuring that information out. already.
Yeah, exactly. Yeah.
It's
And
like,
who has the incentive to like, purchase those products or build those products? Yeah. So I mean, like, you don't have to worry so much about like what product they're gonna purchase. You're just like, well, we know these people, this is what they're gonna do. And we know that AI will be able to help with that tremendously. So we can invest in that instead of having to invest in like figuring out
right,
which one of these so-called disruptors.
right,
Now, I do think that like there is an AI company and it is an actual disruptor, yeah, that's pretty important. But I think that like you and I have talked about this in the past, it is very difficult to uh, selectively pick stocks that are winners, or even like startups way beforehand because there are so many things
yes,
that go wrong. And it kind of reminds me of like a conversation I had once with this guy about sports betting, where he was like, it's difficult to called handicapping, pick the winners based on like, oh, I heard this guy was injured, etc. He's like, bookies are in the business of making money, so they know what they're doing with the numbers. So, and it's kind of similar, right? Like we think about like stocks going to the stock market. The finance people know what they're doing. Like
yes,
the idea that like it's not that like it's impossible, but the idea that you're going to be the person, especially like a retail investor is going to come along and oh, I found the alpha. It's just like, well, it's not impossible, but it's unlikely. you know,
it's very
yeah,
unlikely.
yeah.
And
Like
you
why
don't
why
need to do it to make money.
yeah
That's the really good news.
yeah
It's like
yeah
it's also way cheaper to invest in if you're using ETFs and funds like frankly we do. If you're
yeah
a smart investor, uh, it's easier to buy cheaper funds that are
yeah
going to have exposure to a lot of sectors that are going to benefit from all of the different versions of AI. Then some of the more expensive funds that just pick the handful of stocks that literally like either have AI in the name or prominently that's a big piece of their business. Because not all of those have even been that profitable. Like some of
yeah
the
yeah
most capitalized ETFs that go out and pick AI stocks have not exactly picked winners.
Well, and that like follows with like the economics, right? Like, I mean, truly disruptive technologies, especially if the whatever it is easily to replicate and like there's not like a high barrier to entry. Usually have a lot of competitors, and yeah, it's just like it's almost like all of them are going to be like most of them are going to be unsuccessful. We go back to the
Yes.
dot com era. We think about all the dot coms that came out. People made dot com for anything. People just buying websites and like throwing up ideas. You know what I'm saying? And like, and how many of those are around? And it's not that like the technology is not going to improve and make everyone's life better. But it's going to consolidate. There's going to be winners and losers. And like, do you like gambling to try to find the like 1%? That's going to be that's going to be a winner is just a lot more difficult. Like you said, like most of these things are going to be losers by definition, right? I mean, it's just like that just is what it is. So, yeah,
Right. And so picking to me, one kind of like obvious place that shows up on balance sheets and in the fundamentals of companies, in terms of like going out and finding, okay, who benefits in the long run from utilizing and making a profit out of utilizing AI. One
yeah,
thing to me that's always really interested in thinking about is CapEx, so capital expenditure. Does a
yeah,
company actually invest in the business doing better all of the time? Some
yeah,
companies long ago stopped doing that. And
yeah,
the
yeah,
results have been predictable. They do like buybacks of their stock. That's the main thing that they do with money. Well,
yeah,
they may not be the best AI plays.
yeah. Exactly. I think that you're right, and there's like I know there's like a big thing against stock buybacks. I don't necessarily have this huge bias against stock buybacks, but it is an indicator of something, right? Just because it can be a good thing, sometimes it's just a thing people do because they don't know what else to do, and that's not
Yes.
necessarily the reason you want to do it. Now, if you're doing it because you're like, hey, um, we feel like our like stock is undervalued and we can return value to our shareholders, that's one thing. But how many times is that really what's happening? And how many times is it like, yeah. So I mean, yeah, I think that's. I also think we should have a thing about that one day because I do think like even the complaint against stock buybacks is always one of the like more insane complaints I ever heard because I'm like, well, someone has a stock and then they sold it back to the company, and now they have money. Like they act as if there's been some sort of like huge ripoff here. You know what I'm saying? Like, look at what these people have done. It's like no, it's just like it's just purely the only thing that's going on here is like maybe you would call it speculation. You might have a better word for it, but it's like basically each side has decided what they think is the best choice for this.
Right.
Nothing nefarious has happened, but you are, I think, onto something when you see this pattern of stock buybacks and reduced capex. You're thinking like, are you still innovative? Or are you still are you a blockbuster?
Right. Because there are those that actually is a great podcast idea, the buybacks versus dividends conversation. Because
yeah.
really they're two sides of the same coin.
Yeah.
It's really funny
Yeah.
when people are like really into the dividends are like, I despise buybacks. It's like
Yeah.
it's the same thing. It's like
Yeah.
two ways of
And,
doing the same thing.
and you see this like sort of like this, I don't know, I think you see this sort of moral accusation about, they're buying back the stocks. It's like, well, nothing has really happened. You know what I'm saying? Like in terms of like the balance sheet, they thought it was worth more, so they bought it back. But like technically, it's worth what is on the market. It's just been a like exchange. That's it. And so I just think it's odd when they say that. I'm like, what you're usually when people make that comment, I think what they're really saying is we would have liked that money.
Yeah. Sometimes.
Like when the government's saying that, I think that what they're saying is like, well, rather that we had money to buy back stocks, we should have taxed you more, and maybe that's an argument, but it'd be I'd be more honest if they just said that instead of making it seem like it's some sort of nefarious thing. Just say, I want to tax you more.
Right, because dividends are taxable,
Yeah.
and buybacks are not. And so,
Yeah.
yes, yeah, that is an argument
Yeah.
to be made, but it should be made in good faith and just say
Exactly. In
that's
good
what you're
faith.
doing.
Just be honest that that's what the problem is.
Right. Yes. So that is a good point. But AI, companies that are not doing much investment in their core business, probably not fantastical AI plays, but there are easy ways to track who is doing a lot of capex, and it's on the balance sheet. And there are even some fundamental indexing approaches to look at how much of uh, how much of your investments are doing capex. Who has completely neglected to invest in their core business. There's usually a lot of overlap with other things like quality. Usually, the highest quality companies also invest in themselves, not just hanging out and just basically being in zombie companies, which we also have talked about in the past. The zombie phenomenon. Zombies probably not going to be saved by AI. Just saying.
Yeah. Well, I mean, zombies probably a lot of them are probably going to have a tough time just making it through the next 2 or 3 years. The
Yes.
podcast we had, I think it was like a year and a half or 2 years ago, we discussed where interest rates were headed, which is why both you and I were surprised to see so many people, so many like just like managers, asset managers, also just like so many people at banks and stuff, sort of just stick their head in the ground and think that like, no, the interest rates aren't going to rise. And I think that like it really does come down to that. Like, it's not that like these people aren't intelligent if they were being honest with themselves, and perhaps
Right.
more importantly, if the risk was aligned with their own incentives, they would have been more honest about like, yeah, these interest rates are coming. But it's a lot easier to go tell people who whose money you're managing, or people who shareholders, that like, no, interest rates aren't going to rise and we're going to be okay, than it is to like tell them like, look, we're gonna have to buckle down and like things are not going to go well. That's kind of like off the AI topic, but I just thought we mentioned that we did have a podcast about that.
Yes.
Yeah.
It's funny. We actually have we talked about that for a long time.
It wasn't a little bit. Yeah, exactly.
It wasn't just that. I feel like we talked about that 3 or 4 different times.
Which is how I know that like if someone wanted to see it coming, they certainly could have seen it coming. It wasn't like it captured everyone by surprise. So yeah.
Yeah, so you could just listen to the Chaim Investment Advisors podcast.
That's it. And also in addition, when we did talk about like that, later down the road they had that first Silicon Bank, one of the first banks to really sort of experience the hardships of not only not correctly predicting the interest rates, and they're really making some major mistakes there. Just like the kind of mistakes that were like you almost like, did, what were you aiming for here? Like you did the opposite of what anyone should have done. But the other thing is, I think that like banks and businesses, the dangers of them using AI, which I think is another thing, the dangers of them believing that like this thing can't be wrong. Sure, my common sense tells me the interest rates are going to rise, but I got for some reason I'm like, you don't know how it's generating that data and like really what's going on. Especially when you talk about the neural networks, they have no idea what's going on any more than we have an idea of like what's going on in our brain. So like, is it doing something? Yes, but like, is it doing something that's productive? And you have to wonder like, what kind of like risky tools those people might have been using, that like got them into trouble. Whereas like if it was like back in, in a time where they would use more of their own common sense, they would have been like, okay, we've seen this cycle before. We know where this is headed.
Right. Yes, there definitely was a lot of suspension of disbelief involved with some of the risk
Yeah,
management AI innovations in some
that's
of
right.
those major institutions. That's
Yeah.
definitely a thing.
You want
Uh, yes.
Yeah, you want that in moviegoers, not in asset
Right.
managers. You know what I'm saying?
Yes,
Like
it's true. And so I do actually use to give a example of AI and how people in this industry use it. One AI that I use comes from BlackRock, and BlackRock has a great AI tool to look at factor exposure. So anybody, when people talk about like, um, some people have mentioned to me like, oh, AI is going to be used in finance and in portfolio management. It's kind of comedic to me because it's like, yeah, I mean, it's like been happening for a really long time.
yeah,
Yeah, we already knew that.
yeah,
But when you're into factor investing, and we have talked about factor investing a ton, uh, clients certainly have heard a lot about factor investing from me. Factors, factors were mostly started to be discovered back in the early 70s.
mm,
So the 70s, the 80s, the 90s, they all had benchmarks and new factors being figured out. But
yeah,
we already, the math to do factors has
yeah,
existed for about 50 years in some cases.
yeah,
But they used to be something you did by hand initially, and then it
yeah,
was by a spreadsheet, and now it is by AI, where huge
yeah,
amounts of data about companies can be analyzed extremely fast, much faster than I could do. And that just makes it much more possible to do factor investing. And so tools like factor investing that used to be back in early 2000s, if you wanted to get deep into factor investing, you needed to go to a major hedge fund sometimes
yeah,
to really get into that kind of strategy. Now, most investors take for granted that their random investment advisor not only knows what that means, but
yeah,
also has the tools to credibly do that on their own, or at least understand the exposures that they do have. So that has been interesting to watch develop. That more and more investors, because of AI, do have tools to do analysis that used to be like you had to have a many billion dollar institution to actually use this stuff. And so it
yeah,
is disruptive in that sense of hedge funds aren't the only game in town in terms of
totally, totally.
being able to invest in those more sophisticated uh, strategies for sure.
And I think that like that is like sort of like where, again, if we were thinking about like where AI is really going to make an impact, to sort of reiterate, but in a different way. So what we're talking about is like technology always being like the sort of great equalizer. And so anytime you can do something more efficiently on a smaller scale for like less of price, lower cost, that is the sort of thing that like you said is disruptive. It's creating new markets. So people who wouldn't have previously had access to that information are now able to access that information and make decisions. And I think we're going to see that like across the board with all sorts of different business related tools where it's just like certain things which you wouldn't have previously been able to done, or you would have to pay someone a lot of money to do, a professional or an expert. You might have to pay them like $30,000 or $40,000 to come up with like a certain business plan. Whereas now maybe it can be done for 10 or less, and that is a huge impact. And I think that's what people forget. Like it doesn't sound like it's not romantic. It doesn't sound like really flashy that like people can do things for less. It doesn't sound great, but it's a huge deal because there's no way like if you go back to I don't know, let's say you just go back to like the 1800s, it's highly unlikely this planet could like support like most of the people on here, given the technology that we had at that time. It's just in no manner. Like if we went back to like that time, like lots of people would no longer be here. And so people forget like that how important the efficiency is, how important like to do something for lower cost is, and how much freedom it gives, those people who may not be as high up on the economic ladder. So
Yes. And many people also will dovetail this conversation with technological deflation,
yeah,
which is
100%.
something that the number one asset manager in AI, or
Yeah.
number one in her own estimation, which would be Kathy Woods,
Yeah.
constantly does.
Yeah. 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 I mean, it's like that's a huge issue, technological deflation. Like, I mean, I think like, one of the best examples is you would ask yourself, like, if we go back to like 1066, I think was when Britain was started. And we ask ourselves, like, would we want to be like any world leader at that point? Would we want to be, a middle class person in America? And I think that like the answer is pretty, you'd want to be a middle class person in America because you have a phone and a car. And like, I remember reading about, historical times at that time. There were people suffering all sorts of ailments. And there were simple things that like we could get fixed in like 30 minutes, And then that's real, like, I think that's the optimistic side of like both AI and technology is that like we're going to see increased efficiencies. Um, is there going to be like more crazy stuff, generative stuff? Is it going to like impact law and stuff because of how those people were able to obtain that information? Yes, there's definitely going to be a flashy story to go along.
Yes.
But whenever you see something flashy, you don't want to be the thing that's like burning down with it. Just take your time. Like,
yes. Yeah. Yes. And so I think that's a pretty good summation of some AI ideas. There are investment funds with AI in the name. Many of them are
yeah,
expensive, and they are universally very literal. So when you
yeah,
go out and buy these, like for example, Kathy Wood's fund,
yeah,
if you are just doing the most cursory glance of what's in that fund, it says, oh, it's like multi-sector. It covers multiple sectors of the economy. It covers consumer discretionary as 15% of the fund. Guess what the weight of Tesla is in that fund? It's 15%.
yeah, yeah,
So
yeah,
it owns Tesla stock.
yeah,
That is how diverse your sector exposure is in a fund
yeah,
like that.
yeah,
And so, yes, technically it has consumer discretionary, but there are consumer discretionary companies that have nothing to do with literally being an AI provider or software service or
right,
hardware that are going to benefit profoundly from AI. In fact, consumer discretionary is someplace that might benefit a lot more than other places because we're talking about like in the Northwest, big consumer discretionary is Nike. That's like
yeah,
the biggest
yeah,
consumer discretionary firm, and things like uh, purchasing, person management, inventory management, logistics prediction, all of that stuff is absolutely impacted and improved by AI potentially. And so,
yeah,
you literally need to go out and buy Tesla
yeah,
from AI
yeah,
in
yeah,
a sector like there are many opportunities that will be attractive over time. And that's also to say that like there's a little bit of FOMO going on with some investors and say, oh man, I don't have a fund that literally says AI in the name, man. Like I'm missing out.
yeah,
And
yeah,
my approach has been to say no. I mean, generally, if you own any kind of diversified fund,
Yeah.
the major names in AI absolutely are pretty big slices of those portfolios. But also,
Yeah.
you're going to have a lot of pickup in the long run from these firms that, okay, maybe they're like less pure play. But a lot of those pure play companies like C3 AI have hemorrhaged in money from investors. Like they are
Yeah.
deep, deep down. If you were an IPO investor, you've lost an insane amount of money. Uh,
Yeah.
and so less literal ways sometimes are more profitable ways in the long run, right?
Definitely. I think it like comes back to that, that thesis, like if you don't really understand what it does and how it does it, maybe just stay away from it.
Yeah, be diversified. I mean, there's like what every finance person has always said,
Yeah,
basically.
yeah. And
It's
like,
true.
we always pretty much talk about how like it's just really hard to pick one or two winners. So going out and trying to like, be a part of like often this is true, I think, for funds, like if it's trendy, there's always gonna be an expensive fund that like is trying to sell something that's trendy, that's new. It
Yes.
happened, I think, with like even with like ESG and that they have like when it first came out, right?
Oh,
And the
yes.
thing is, like, you go look at these funds, they usually have like a marketing fee, and it's like, and with these new trendy funds, it's always like this huge marketing fee, and so you have to ask yourself, what are you paying for? Because if they're spending most of their money on marketing, are they spending most of their money on researching whether or not these are like making good selections? Are they spending most of their money, doing the due diligence, going out to these companies and finding out, like, like, yeah, so I think that like that's
Yes.
really one of the issues. Like, are you asking the right questions? What was it with was it Theranos? I don't recall, like the woman
Yes.
who yeah, like again, a situation where like people just didn't want to ask the right questions. If they'd asked the right questions, and those people who did ask the right questions immediately knew that this is like a fraudulent thing. This is like what you're saying is not possible. And so I think that that's really where not only do you want to like be prudent in investing, you want to be just prudent in general whenever you're like purchasing products, whenever you're just like there's some selection where AI can be involved. You want to make sure that like it's doing what it's supposed to be doing, or like it's not a lie. you know, um, yeah, I would say like if anyone hasn't tried ChatGPT or Dolly or any of those other products, definitely you should go out and check them out. And I do think that there are some places, some serious places where there will be a disruption in AI,
Yes.
but I also like question like whether like retail investors and like just regular investors will be able to invest in those products, because like the fact is a lot
Right.
of times those sort of products, those sort of startups, you just don't have access to unless you're a qualified investor, like you're
Yes.
like you're doing angel seed funding. So like, yeah, there's going to be some changes that'll come down the road, but what can we focus on right now that like we can do to like uh we both make good investments and just be prudent. And I don't think that like those sort of things are available to most of the public. So yeah.
Absolutely. Yeah, and market factor too. That's something we should talk about too. A timely thing to talk about. Another podcast idea.
Yeah.
If you just have things that have the market factor, and you look at your investment, you see a beta. If you've ever seen that on Yahoo Finance beta next to your fund, well, if it's
Right.
one, well, you have market factor. And
Yeah. Yeah.
AI is absolutely in the market factor right now. It is the
Yeah.
market factor this
Yeah.
year. So,
Yeah.
if you have a good beta dialed in, you're
Yeah.
already riding the waves, man. It's
Yeah.
a
Yeah. Yeah.
big
Totally. Yeah.
investment trend.
Yeah.
Absolutely. So
Yeah.
that's the good news for many of you who uh, never got around to buying AI trendy ETFs. Good for you. You
Yeah.
probably got the benefit a lot cheaper.
Yeah. 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 Totally. Exactly. Yeah. I think
Yeah.
that's true. But yeah, I think that like I think that's good. We should definitely talk about market factor in another podcast, and I
Yes.
think yeah, that would be cool.
Yes. That is a trend of the year to talk about because it's all of the other factors are being talked about. Everybody's
Yeah.
banding about moment. This is the year of growth, man. The year of momentum, man. the year of value, the year of size. Historically, if we are just following uh, economic cycles, market factor is the outperforming factor of such a segment as we are in of a cycle. And so definitely something to talk about because nobody else is.
Yeah, yeah,
But good to mention in this AI discussion, absolutely,
yeah.
because they're basically synonymous. And if you've been following on Instagram stories, uh, I think I've already made many stories about this, and
Yeah.
many to come of what has happened there.
Well, it'll be interesting to see like who is interested in capex, what companies are interested in capex moving forward, with the notion that rates are probably still going to rise higher than they are, because the idea that like you could release more money to get ahead of that is the opposite of correct, you know. So like so like printing more money to get ahead of the rising interest rates is not really a good solution. So I think that like that's like really that's really it's going to be interesting. There's a lot of like prudent decisions to be made by a lot of like large companies going forward, like what technologies they're wanting to invest in and where they're going to put their money. Yeah,
Absolutely, as always.
yeah. It should always
Should
be like that.
always
Yeah,
be like that. But
don't get me wrong.
we had many years of money was just too dang cheap, uh,
Yeah,
which we have
yeah.
also talked about before.
Yeah, and if you think about it, like another like I always like to look at what large companies do with their money, and when I want to like know where the economic cycle is, I think this is more telling than what the Fed says, or more telling than like what economists say is like what are people doing with their money because those are the people who are spending large amounts of money, and they've saved
Yes,
money for like a long time, and I think like one of the reasons they might have been saving money is because they understand that like there's gonna they're like maybe knowledge they don't want to share with the public, but they understood that like the belts would be tightened a little bit, and if you look at these
yes,
like large companies like Apple and Google, they have huge amounts of money, so that they can continue to operate.
yes.
You
Or
know,
Shopify. Shopify at one point had like just like 7 years of cash burn lined up in cash, which
yeah,
is
yeah,
truly a
yeah,
staggering amount of cash to be having.
yeah. 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 And so then like as we like head into like, more inflation, they both have more money and they also have if it's something that they're interested in, they'd be willing to spend it on something that they're interested in because prices will be going up. So I think that's like it's an interesting spot. But yeah, I think like I mean hopefully people understand a little bit more about AI. I don't know if you guys have questions, you should definitely let us know. But I
Yes.
do think that like there was a sort of like big misunderstanding by a lot of people about like I remember seeing Chat GPT is like super smart and can pass like SATs and stuff, and not even understanding how the technology works, let alone like that like it's not like a sentient thing. And honestly, like you said, these things need prompts. They don't do anything by themselves. So when I saw these like you see these stories and be like Chat GPT told me I should leave my wife, and I'm like, yeah, but what did you say to her? It didn't just say that, okay?
Good point.
That's really more telling about you than it is about Chat GPT. So yeah,
Oh, that's yes, yes. Hopefully, people are more educated on AI investing. And as always, ask us questions, and we
yeah,
probably will talk about them either next time or on Instagram or an email. However, you get in touch with us and follow us, and more podcasts to come, hopefully, which you know difficult
yeah.
to schedule, but we will do our
Yeah,
best to
we'll
schedule
try to
them.
make the time. Yeah, we have like actually, I think because like we want to talk about market factor and we want to talk
Yes,
about ESG because I think
yes.
that there's a lot of conflation
Right, we
there going
gotta
on
do
with
that.
different.
Yes.
Yeah, because like it's become a very political thing. I
Yeah.
think it's become like very like polarizing, and I think that like just getting down to like what ESG is and how it works and what what is going on when people like are making like different ESG accusations, etc. So yeah,
Yes. Getting back to fundamentals on what even is ESG, where there's
yeah,
so much political conversation, is a good idea. So that
yeah.
is uh prime topic as well. And China, like
100%.
people still ask about China, and we got to
Yeah.
talk about China one of these times too.
Yeah.
There's a lot to
Well,
talk
yeah.
about there.
That's just on the global economy. There's a lot to talk about in general.
Yeah,
It's funny because a lot of these things have become more politicized. We talk about inflation, it's become more politicized. And these are things that they have specific root causes and they have like specific definitions. And so people don't need to get lost in like the sort of coloring by politicians of like what these things are and it means this, it means that. And in fact, you know, it shouldn't be an identification of like what your politics are on what inflation is.
right. Yeah,
Those two things should be far removed from each other. So,
it's true. I
yeah,
have been talking about inflation this whole wave that
yeah,
since 2017.
that's
So
right. Yeah,
over multiple presidents, I've talked about the same
that's right.
project.
Yeah, yeah. So
The
yeah,
record will show.
that's right.
Yeah, yeah. And so yes, until next time, uh, buy the cheap funds,
That's right.
do your research, ask us
Yeah,
questions, and enjoy. We'll see you next time. This is Chaim.
yeah. Talk to you later, Pablo.
Peace.